So you're Toronto based. Is there a reason you're starting Mojo in the US instead of Canada?
Yeah, our lab's in the US. It's in Arkansas. So our chief science officer's down there with his lab. So all of that food science works it's been developed there. And our fulfillment's all down there. And the US, it's easier to put out products. It's a much larger market. And so it just makes a bunch of sense for us to be playing in the US. And it's just the kind of cohorts and demographics and people that we're targeting. And a lot of the requests early on were from people in the US for products like this as we were starting to build it out. It just made a ton of sense for us to focus there first.
For sure. Was it your chief science officer or Arkansas? Which came first there? Like, how did that end up being where your lab is?
We actually met him on a psychedelics conference, virtual conference, just as COVID was kicking off. So all of the conferences started moving online, and he was on there with one of our advisors chatting on the side panel as the conference was going on, and hit it off. So our advisor introduced me to him, and Daniel's been, working in cannabis and CBD and general health and wellness products for a good long time, but he's got a real passion point for psychedelics and wanted to start work in that field, be it whether extractions or anything else. And so we started jamming on ideas and hit it off, and he joined the team. He's been incredible to have on board, and like I said, he's the driving force behind all the R&D and food science.
Very cool. So tell me a little bit about the company then. How many people are on your team? Is this a bootstrap venture? Have you raised some money?
Yeah, so we started it February last year. So launched the company and then immediately went into lockdown. So it's funny, most of this company's been built throughout the pandemic, and I haven't met in person probably 80% of the people that are involved, which is wild. We've got a core team of 8 people now, so kind of ranging from science, ops, marketing, and then we have a great advisory board. I think with a company like this, I've always have the mind that it takes a village. And so we wanted to, onboard a lot of interesting people very early on and surround the company with some interesting folks. We've got an ex-president of Red Bull Canada. We've got some ex-vitamin water kind of guys on the CPG side, capital markets folks, science. We've got a psychedelic therapist and therapeutics doctor. So we really tried to bring in a bunch of people that can give us good advice and steer us in the right direction. And we have our core team of people actually, working on the operations. Early on, we raised a kind of small strategic round for a bunch of folks in the summer last year. And then we raised another small round through some funds. So pretty grateful to be working with some of the best funds in the space, a fund called Vine Ventures, who love those guys, and they truly get it. They understand the products and the direction, and they backed us pretty early on. A fund called JLS has been a supporter early on. We raised those financings, and then the plan is to do a kind of larger rounds in this summer and then take the company public. So we're probably going to do, as part of that round, we've been trying to think of ways where we can do some interesting things that speak to the values of accessibility and opening this up to more people. And generally speaking, when you're raising money pre-RTO, a lot of the people investing are accredited investors and institutions. A lot of the value just, on kind of investing generally gets sucked up pre-IPO. A lot of the kind of Sequoias and tech world, anybody else, a lot of that kind of upside gets taken out before the company goes public. So if you're buying, Bumble, it's already at whatever it went public at. And a lot of that kind of early growth has been taken out. And so we've been trying to think of ways that we can open it up to non-accredited investors, as well as the institutions, to involve a bunch more people and give people access to the investment upside, but also get behind the company as an accessible story. And so we're playing with the idea of doing something like a kind of a crowdfund type, investment round in addition to the institutional round before we go public. So that should be happening in the summer.
Wow, that's fascinating. And so you mentioned RTO, which is a very Canadian specific thing, right? Yeah. To going public in Canada. And for people listening that are primarily in the US, the idea of a consumer company going public or talking about going public before they even launch. It's like ludicrous, right?
Yeah.
But I understand this is obviously a way more common practice in Canada. And I hadn't heard that explanation before of essentially making it more accessible. One of the downsides that most companies, at least in the US, think of in going public, typically at a much later stage, is just the regulatory scrutiny that comes along with that. How do you think about that balance of either continuing to raising money privately or going public earlier on?
Yeah, there definitely is a kind of administrative overhead that gets added when you go this route. So it's not without its kind of considerations or downsides. It is very different with this. And so in the US, you don't really have small exchanges like we do. And there's pluses and minuses to it. So in Canada, we have the CSE, we have NEO, we have the TSXV. All of these exchanges are essentially venture exchanges. And so what it allows companies to do is raise money from a wider pool of people to back their early stage company in a very similar way that you would raise money from private institutions. The plus side of that, just generally in Canada, it's a really neat platform because the venture exchanges give access to retail investors a high risk, high return proposition that you wouldn't normally get from public companies. We have incredibly high growth companies going live that would normally only be the domain of, like I said, accredited investors. And so that's the advantage, certainly on the consumer retail side, is you get access to these deals that you wouldn't. Cannabis was big for doing this in Canada. We had an enormous amount of high growth companies going live on the exchanges. Of course, since then, we've had some deflation in the scene as America's come online. But and then for a company, the advantage is you're essentially extending your capital pool base. So you're opening it up to a much wider pool of potential investors. So for us, it's going to allow us to bring on board a much more diverse group of investors. Once we're public, people have access to buy and sell and all of that type of stuff. And it gives you the tools to be able to quickly raise additional capital. Let's say if you want to do some M&A or something like that, which is a fairly typical thing to do for these early stage companies. Let's say we want to buy another mushroom brand, well, we'll be able to leverage our public position to acquire these companies and scale our growth a lot faster. So it's a mechanism in Canada for venture companies and allowing retail investors to get involved at a much earlier stage.
Interesting. So we mentioned RTO a couple of times. Can you briefly explain what that is and how that works?
Yeah, so an RTO is a reverse takeover. It's very similar to what's called a SPAC in the US. So instead of doing an IPO, which is listing your company yourself as a fresh company going on the exchange, what you're doing with an RTO is you're looking for a company that is already public, which may not be doing anything, may have failed, may just be a static company. And you're essentially taking over that kind of shell and reversing into it. So it's a reverse takeover of the company. So you don't have to go through the usual kind of channels and kind of do all that usual stuff to get on the exchange. You're accelerating that process. Now, there's advantages and disadvantages to doing that as well. It's a much faster process that a lot of these higher growth companies like to do.